Welcome traders to this video analysis brought to you by Admiral Markets, where I take a look at the expectations of more dollar uptrend, in my opinion, for the remainder of 2014. Before we take a look at the charts though and take a look at these currency pairs, please be aware of this disclaimer. This video is intended for a global audience and may not be suitable for everyone. To find out if it is, check out admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading foreign exchange is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for educational and informational purposes only. And by continuing watching this webinar, you agree with the risk disclaimer, and I thank you for your attention. Alright, starting with the euro-dollar weekly chart, of course we see yet again another bearish week last week, a bearish start of December 2014, and the dollar trend here to the upside, the dollar upside, right, which means euro-dollar downside, is continuing for a very long time already, half a year, 2,000 pips downward. Last week, a continuation of that, and not expecting anything different this week. Yet again, bearishness, and especially, of course, if price stays below last week's high, of 125.08, even the high of 2 weeks ago, 125.34. As long as price stays below that, I am bearish on the euro-dollar and expecting downside continuation. But from which level? That, of course, is the next question. A stop loss above these green lines, in my opinion, should be relatively a good spot, first of all. And if we then look at the various time frames, like the daily chart, for instance, we can put horizontal levels to indicate where price broke through. That could be, of course, a pullback level for more downside, for instance. We can put even a fib from here to here. And you can see already price respected the 61.8 fib. So if we then move the fib a bit lower, for instance like this, then we could probably see price at the 50, 61 or 78.6 fibs. Any price reaction, any candlestick patterns at these fibs would be good moments, even direct entries with the stop loss above the green lines there, and a target at around 121.50. Why? There's a minus 618 target, but also a support trend line. That support trend line is from the monthly chart. We're connecting the bottoms, and that is a big bottom of a monthly wedge. This is the pound dollar weekly chart, and there is really hardly any difference between the euro and the cable here. Last week was bearish. There's been a significant downtrend, just like the euro dollar, and the close was very near the low as well, indicating that the bears were in control throughout the entire week and the end of the week as well, just like the euro dollar. So here too, kind of looking for the same thing. Not expecting price to break above this orange zone here, and as long as price stays below it, I am bearish. If price starts to retrace last week's candle, that would be a good entry zone for a short to the downside. And otherwise, let's take a look and zoom in to see more information about this particular trend. We can put a fib, for instance, from here to here and see price stopped at the 38.2 fib and has broken the bottom in the meantime. So the main target is the minus 618 target at 152 and 154. But of course, there could be some bumps up and down before we get there. If we look at the 4-hour chart, you see that most recently we had a pretty big consolidation. Price is trying to break through this consolidation. So one more hook back to test this top, for instance, is easily possible. Test these bottoms here and continue lower is something that certainly could happen. Something like that, a break, pull back and go. 155 is also a psychological round number. So somewhere around there could be a bit of a bounce and a stall, and the downtrend might not continue smack right through a support level like that. So expect some volatility, maybe a bit at least around that level. Otherwise, yeah, that's about it. I guess stop loss above these orange lines, and entries, looking for entries when price makes a bit of a pullback, preferably for that downside. All right. Now, if it doesn't, if price makes a fall right away, I'll still look for the pullback later on this week to this level. All right. Now, of course, if price does make a fall and like this and starts to make a small bear flag, and it is Tuesday or Wednesday, and I'm seeing a breakthrough yet again, there could be an intraday trade, an intraday short upon the break of this trend lines, right? So that's what that would be basically the backup scenario. If price doesn't make the pullback, if price just keeps falling, then I would rather wait for the second fall here and take the intraday breakout. Until that point, though, I'd rather wait for pullbacks because it easily could make a pullback at this point. The dollar yen is quite straightforward. It too has a very bullish candle last week, indicating that dollar strength. It had already a 1,500 pip plus increase in about a few weeks. And the dollar yen, I mean, is just an amazing uptrend here. It's quite impressive to see. It is perhaps the biggest trend in the last few weeks. And I'm expecting dollar yen to continue. I see no reason as yet for the dollar yen not to continue. There was some divergence in the past, but now that we've broken through 120, I think that one more upside is definitely a decent probability from the broken 120 level that was resistance, could now become support. There's also a trend line, and I would expect 120, 120.25 to be the bouncing spot for uptrend continuation. To what level? Let's put a fib on the 4-hour chart, and we can see there's a 38.2 fib as well. So for the moment, 123 at the minus 272 target seems to be a decent level to target for the dollar yen upside. The story is really not different on the Aussie. It too had a very bearish week. In fact, it already broke last week's low. So it's the same, similar story, downtrend, bearish candle, in fact. Across the board, we see dollar strength, in fact, continuing. And this is just a 4-hour chart. You can quickly see impressive downtrend on this particular pair as well. The only thing is that we're pretty close to the bottom of this channel. Now we're trying to break through that channel, but that could be easily kind of a small break, and we kind of retrace back to close to the top. So that's something that I would like to see, is price making a retracement either to the top of that channel or at least to a fib of this last swing high, swing low, like the 50 or 61.8. Now it could push through, but considering the fact that the week just started, I don't like these early breakouts, and I'd rather wait for a bit of a pullback or at least some kind of chart pattern like a bear flag before trading it short again. All right, with that said, don't forget to take a look at this week's lineup of great webinars we have. We have the weekly FX recap today at 6 p.m. Then we have expert advice, counter trend trading on Wednesday evening. Thursday evening, we have approach is more valuable than 1,000 indicators. That's the 11th of December, Thursday. And in the morning, we have 2 webinars, Tuesday and Wednesday, live trading lab and the Forex strategy on Wednesday. So I hope to see you in one or all of these webinars. Looking forward to that. Don't forget to take a look at the social media as well. And with that said, I wish you all a very good, happy hunting and good trading. Cheers.